Good evening, everyone, and a warm welcome to ITW Presents Vista 2020. This session is exclusively brought to you by our title sponsor, ITW Consulting. We have with us today none other than Dr. Raghuram Rajan. Professor Rajan is the Catherine Dusac Miller Distinguished Service Professor of Finance at Chicago Booth. He was the 23rd Governor of the Reserve Bank of India between September 2013 and September 2016. Between 2003 and 2006, he was the Chief Economist and Director of Research at the International Monetary Fund. His research interests are in banking, corporate finance, and economic development, especially the role finance plays in it. Dr. Rajan is a member of the Group of 30. He was the president of the American Finance Association in 2011 and is a member of the American Academy of Arts and Sciences. In January 2003, the American Finance Association awarded Dr. Rajan the inaugural Fisher-Black Prize for the best finance researcher under the age of 40. Welcome, sir.
Thank you.
The session is going to be moderated by Professor Rupa Chanda from IIM Bangalore. She has been a faculty member in the Economics and Social Sciences area at IIM Bangalore since 1997. She is currently the RBI Chair Professor in Economics and Head of the Economics and Social Services area. In 2018, she briefly served as the Head UNESCAP Sub-Regional Office for South and Southwest Asia, New Delhi. She received her PhD in Economics from Columbia University and her BA from Harvard University. Before joining IIMB, she worked as an economist at the IMF in Washington, DC. Her research interests concern the World Trade Organization, international trade in services, regional integration, and migration. Welcome, ma'am.
Thank you.
In terms of the format of the session, some initial questions will be posed by Professor Chanda, following which the floor will be open for questions from the audience. We will end the session by 8 p.m. Indian time. Without any delay, I would like to hand over to ma'am.
Hello, good evening, everybody. A very warm welcome to this event. And it's my great pleasure to virtually welcome Professor Raghuram Rajan to IIMB, to Vista. I'm particularly grateful because you've accepted our invitation on a Saturday morning, Chicago time. So today we'll spend about an hour discussing a variety of issues concerning the Indian economy as well as the global economy, the immediate and medium-term challenges. So before I pose the questions, I would like to just provide a brief background to the current scenario as well as outlook. So as we all know, 2020 has been a very difficult year. More than 1 million lives have been lost to COVID-19 since January. The toll continues to rise. According to the IMF's World Economic Outlook, close to 90 million people are expected to fall into extreme deprivation. Governments have taken fiscal countermeasures through income transfers, credit guarantees, equity infusion in order to cushion losses and avert widespread bankruptcies. Central banks around the world have expanded their balance sheets to provide liquidity. Although such measures have helped mitigate to some extent the adverse impact of the pandemic, the outlook remains grim and difficult. Global GDP is projected to decline by 4.4% in 2020, and despite a rebound in 2021, will remain 0.6% below its 2019 level. The global unemployment rate is expected to climb to its highest since 1965. Fiscal countermeasures are projected to raise the sovereign debt to GDP ratio in both advanced and emerging market economies. Although inflation is expected to remain subdued, the possibilities of inflationary pressures from supply-side disruptions and other external shocks can't be totally ruled out. Global trade is expected to contract by over 10% in 2020 due to weak final demand, supply chain disruptions, and trade restrictions. FDI will remain below pre-pandemic levels over the next 2 years. And compounding all this is a high degree of uncertainty and geopolitical tensions, which will create both upside and downside risks to global recovery. The Indian economy is also at a difficult crossroads. It's one of the worst affected countries. The April-June quarter of 2020-21 saw a GDP decline of 23.9%, the sharpest contraction among G20 nations. While GDP is expected to rebound in the latter half of the year, recovery is likely to be sluggish and uneven. Economic projections are being constantly downgraded. The latest estimates suggest a decline of 10 to 15% for the year. The government has announced 3 stimulus packages, the biggest one being the Atmanirbhar Bharat Abhiyan package in May. More recently, the government announced another package to boost demand by $10 billion. However, with increased borrowings by states and the center and shortfalls in revenues, the consolidated fiscal deficit is expected to reach around 12% of GDP. This has raised concerns about the ability to finance the government spending needs and whether and to what extent monetization of the debt may be needed. Recent changes in trade and FDI policies in the wake of the pandemic and frictions with China have raised questions about the government's stance towards integration with world markets. There's also growing concern about the deteriorating health of the Indian banking industry, which was already under severe stress pre-COVID. NPAs are expected to rise further to about 12% or more by the end of 2020-21. So the Indian economy is faced with severe challenges and trade-offs. The current economic environment, both globally and in India, raises many questions about the recovery path, macroeconomic management of the crisis, and post-COVID challenges. So this is what we hope to discuss, some of these issues which have been raised by the current scenario and outlook, and to get your views and insights on the same. So thank you very much for agreeing. And, I will start with maybe a set of questions on the Indian economy. So let me begin by asking, why do you think the Indian economy in particular has been so badly affected? Is it entirely due to the COVID crisis, or does it reflect other fundamental weaknesses going into the crisis?
There were weaknesses going into the crisis, of course. I mean, if you look at growth, it has been slowing steadily since 2016. If you look at banking sector NPAs, there was a period in which we had brought it down, but it seemed as if they were rising again. And certainly we were already, before the COVID crisis, exhibiting forbearance to small and medium enterprises, essentially telling the banks not to declare their loans NPA. So there were difficulties in India even before, and one of the most important places of concern is the low investment. We've had low corporate investment for nearly 15 years now, and it didn't seem to pick up. And if you look at capacity utilization, it's still not. It was not great even before the crisis. One reason why firms aren't investing. So the economy was troubled even before. The fiscal space. I mean, we have this record of showing, improving fiscal deficits. In other words, the fiscal deficit is coming down. But there was a sense, and which has been borne out post-COVID, that a lot of the fiscal space was illusory. That in fact, there was a lot of borrowing which was off balance sheet. We were hiding all the deficits. And in fact, the fiscal situation was much worse than the government let on, something which I think it was the accounting watchdog, which pointed this out. I'm forgetting the acronym. At any rate, I think we basically weren't in a great shape going in. And of course, attempts to bring the virus under control were pretty draconic. If you look at Oxford measures of tightness, we had a very tight structure in the lockdown, perhaps tighter than many other countries. And remember, India, being a poor country, very few people can work from home, only about 10%, while in the US, about 45% of people can work from home. And it's typically the more value-added work which is done from home. So a significant fraction of GDP can be continued even with lockdowns. In India, that's much harder. So you had a drastic lockdown, a lot of activity ceased. I mean, no car sales, for example. But it also didn't quite deal with the virus. I mean, this is the tragic part. China sort of had pretty dramatic measures, but essentially brought the virus down significantly, brought the spread down. India didn't. And in fact, while it may be true that the lockdowns bought us time, the fact is the spread of the virus, perhaps through migrants, we don't know yet, but may have increased. And essentially, we've had a much more severe pandemic, still low given the country's size and population, relative to, say, Belgium or some other countries in Europe, but nevertheless pretty hard hitting relative to other countries in South Asia or Africa. So net effect, bad pandemic, bad pre-existing situation, and very limited fiscal resources have been devoted to it. I mean, a number of economists, including me, have said, spend a little more, tighten your belt over the medium term. But if you don't spend now, you risk a more atrophied economy when things come back. The government has chosen not to spend, and instead, if you look at the net measures, apart from the one big measure to support small and medium enterprises with loans, most of them have been fairly small. I think it's been good that poorer households have been supported with free grain, but perhaps we could have done more in supporting those poorer households, but also supporting small and medium enterprises. We will see the net effect of all this, not just now, because we're seeing pent-up demand come back. This is the experience of every country. The third quarter has been very good in many countries. The US, of course, President Trump is crowing about the enormous sort of growth in the third quarter. I'm sure India will have a strong third quarter of the financial of the calendar year, and we will see a lot of growth. But the reality is, what really matters is what's sustainable, and that we'll know only towards the beginning of next year. How much beyond the pent-up demand there is, and if your economy is more atrophied because you haven't been able to spend. Developed countries have spent 20% of GDP. Emerging markets about 5%, and developing countries 1%. We're a little less than 5%, and so I think that there is still much to happen, and we have to be very clever in navigating this.
So you're of the view that really this was not sufficient in terms of the demand side relief package, and much more on supply side, medium term sort of measures, which
I am of the view that what was most needed was short-term supply side measures for the productive side of the economy. You need to keep these firms alive. If they die, your supply side gets shrunken, your ability to produce gets shrunken, jobs don't come back. That's one worry. But I also think there's a humanitarian aspect over and above the demand aspect. That is, we want poorer households. I mean, we're a rich enough country to support those poorer households. And we don't want people starving. We don't want people to skip meals. We don't want people to pull their children permanently out of school because they can't afford the school fees or, in some cases, the college fees. How do we ensure that, we don't have a permanent setback in our human capital as a result of these events? I mean, getting the kids back to school is first already going to be difficult. But second, once they get back to school, how to make sure they don't fall behind because they haven't learned during this period while other kids who have been better supported have learned. I mean, those are all questions we have to deal with, but we have to be very, very clever about it because we have fewer resources.
So, but if we compare with other countries, the bulk of countries, even though the advanced have given, of course, much more in terms of direct spending support, but all countries have given more in terms of the indirect measures. India might be on the lower side even among the emerging markets, though there are others like Mexico also which seem to have given much less. So where's the fiscal space in India for doing that?
You have to... Yeah, it's a great question. And I am not saying that, you can spend blindly and without concern, but you have to create it. And you also have to be very, very decisive about what risks you're willing to take. So ask yourself first the question, what happens if we spend by, 2 or 3 percentage points of GDP more? Does all hell break loose? Well, typically, all hell breaks loose if people think that you're going to be profligate, not just this year, but into the future. If you can convince people that, and by people I mean investors in general, both in domestic financial markets as well as international, that you will bring the fiscal back into order over time, then they're willing to give you more rope. And if you get that rope, then you focus on preserving the capacity of the economy. You get stronger growth over the medium term, and that stronger growth eventually repays the spending that you did today. The worst outcome is to be very austere today, not preserve the productive capacity of the economy, see a shrinkage, and then you have the vicious cycle of lower growth leading to more problems and even lower growth over time. That's the bad equilibrium we want to avoid. Now ask yourself, what are the risks if you spend a little more now? Again, it's important to spend it very carefully, very effectively. I'm not saying spend as if there's no tomorrow, but what's the downside? Downside is, the credit rating agencies may say, oh, you're not going to be able to repay it. Well, that's where you try and convince them through measures which say, I'm going to be more transparent about my fisc. I'm not going to do all the stuff I did before. I'm not going to hide it here and hide it there. I'm going to essentially tell you I'm turning over a new leaf. And for that, legislation is important. For example, legislation strengthening the capacity of watchdog institutions to ensure that the budget deficit is under control. For example, the Finance Commission has suggested a fiscal commission in India, which will monitor our budgets and so on. And those are things we could do, okay? By the way, the audit, CAG was what I had in mind, which I was struggling for the initials. So the point is that, strengthening, the CAG is not meant to look at short-term budget. It's meant to look at the longer-term sort of behavior of the government. But if you had a fiscal commission like many countries have, they could opine very quickly, is the fiscal math right? It's no point going to our private sector, CEOs and asking them, is the budget great? It's always 110% out of 100. What you need is an independent authority to opine, and that would be good. So those are ways you can convince the rating agencies. You're going to come back to the straight and narrow. The Finance Commission has also said, focus on a debt target. Well, we could put up a debt target, a realistic one given where we are, and come back to it. So there are measures the government could take to increase fiscal space. And let's take the worst case scenario. Rating agencies downgrade you. Well, we have $500 billion in reserves right now. It's not going to go away in a day or two. You have the time to react to the rating downgrade. You're not going to be stuck for funds to pay for your exports. In fact, this year we're probably going to run a surplus on net trade in goods and services, a current account surplus. So given all that, I think the balance of risks are that you underspend rather than you overspend. And you should focus a little more on spending carefully.
So coming back to this idea of a legislative mechanism, this issue of a fiscal council or some sort of independent authority like many countries have to look at, the budgeting, look at transparency, medium-term accountability. Do you really see that there is political will to do this? Because it's been suggested for several years now. It's not happened. Is it going to happen now?
Well, in India, we always governments are reluctant to be bound by institutional constraints. But we did put in place a monetary policy committee, for example. Of course, now there's a huge debate, is inflation targeting overly concerning? And I find that debate totally ridiculous when in fact, we are running a fairly accommodative monetary policy, and inflation is actually outside the bounds of the regime. But, those institutions are meant to constrain us. And occasionally, usually governments adopt them when they're not constrained, not believing they'll ever be constrained. And then once they start getting constrained, they start worrying. I think that's part of what's going on right now with the inflation targeting regime. But I think on the fiscal side, we really have no option. And if we could do this, if we did this, I think we would buy ourselves more fiscal room. But for that, there has to be a stronger appreciation of what investors care about and about macroeconomics. And I'm not sure the voices of economists are heard that that strongly in the government today.
So do you think that monetization of the debt to some extent is inevitable? Direct
You can do
monetization or indirect?
You can do some. You can't do it permanently because there's only so much liquidity in normal times that the central bank can create. There's only so much money. So what is money? It's cash in the hands of the public as well as reserves. Well, there's only so much required reserves that banks have to hold. If you try and pump more reserves into the system, reserves become hot potatoes. They want to each bank wants to get rid of it, and that's when you have rapid credit growth. But today we don't have credit growth, so you can actually push some more reserves into the system, but you are effectively sucking them back at the reverse repo rate. So today, monetary policy is being conducted at the reverse repo rate. The central bank is borrowing from the banks, and it's not going to cause too much damage in the short run because the banks have, are very careful about extending credit. But if the economy comes back, you're going to see credit growth becoming more substantial, and you're going to see inflation pick up more from wherever it is at that point. So at that point, the central bank has to suck back its reserves, which means it has to, in a sense, tighten its asset side, also sell down the government bonds it has accumulated. So as a short-term stopgap measure, you can monetize some. In the longer term, the only way you monetize is through either by the central bank borrowing instead of the government borrowing, which is really one of those one pocket, the other pocket kind of things, or it is by allowing for much greater inflation than the central bank today is charged with accommodating. Either of those can happen. I would say that given the central bank's mandate, higher inflation is not what it should be doing, which means it can do this temporarily, but eventually will have to tighten its balance sheet, which means sell down the bonds. To the extent it's doing that in better times, there will be more space for the private sector to absorb those bonds. It's not going to be a big thing.
Okay. So, coming back to the issue of inflation, now you talked about putting in more demand side measures. Now, the debate has been by one side that this might actually eventually lead to more inflation. We are already outside the comfort zone. And as we saw, there was a pause by the RBI recently. So we perhaps can't really risk that. On the other hand, there is this possibility that if, we don't, as you said, keep the productive capacity going and take immediate steps, we might stare at long-term, slowdown in growth and also get stagflation. How do you weigh both these risks?
So first, I'd emphasize that what I'm advocating initially is measures to protect the supply side. And that's important because whenever we think of government spending, we always think of it as demand enhancing. And surely any spending is going to do that. But to the extent that you're making it easier for small and medium enterprises to survive, you're making it easier for them to maintain their productive capacity. And that is going to be very important because if you have a shrunken supply side, then you also have lower demand that it can accommodate without it being inflationary. And essentially the growth potential of the economy keeps falling. That's what I want to stop first. So let's not talk about inflation and excessive demand. Let's first talk about protecting the supply side. Now down the line, and so by this I mean measures to, keep households healthy, to keep firms alive, the viable firms alive, and we can talk about what that means later. On the demand side, down the line, there might be some need once, we've dealt with COVID more effectively to do the usual stimulus. Now, what is the usual stimulus? Typically, it means more infrastructure spending so that you get some ramp up in the demand for steel and the demand for cement and so on, and that tends to lift the economy. So we should be preparing for that infrastructure spending now. The other thing you could do is, as this gets prolonged, certainly send more resources the way of really poor families. they will also spend that. So that'll have both a supply side as well as demand side effect. They will spend that money more quickly. It'll be largely consumables that may be helpful. But I wouldn't see that as demand or supply. It would be more humanitarian. We should protect our weakest segments. So I would say if you protect your supply side, that's actually beneficial in terms of keeping inflation down. And then down the line, when you have that productive capacity, you can sort of stimulate demand, you generate more growth, which can be non-inflationary. So I wouldn't, at this point, overemphasize inflation. Certainly that's the central bank's worry. It should be worrying about it. But I would focus more on trying to keep economic capacity going.
Since MSMEs are a key part to this, and we've seen at least one major part of the relief package earlier in the year was focusing on MSMEs. How effective do you think the schemes that have been announced with regard to credit guarantees, moratoriums, etc., how effective do you think those would be? And I'd connect that to the question that you also raised about keeping the good ones alive, and some sort of reallocation is what you're saying, that let the unviable firms be weeded out in this context and let the more profitable and healthy ones, which perhaps temporarily are having issues, but let them survive so that in future long-term growth is not affected.
Now, I wouldn't sort of presume to play God. And kill these guys and keep those guys alive. What I'm saying is when you have few resources, you have to make the judgment. Who do you help and who do you not? Because you can't help everyone. If you have to allocate funds, one of the biggest problems governments have in allocating funds is transparency, right? You can't be seen as allocating funds to your friends and neighbors. And so what you have to do is establish, especially where it comes to small and medium enterprise, a clear way that you can monitor who's getting the funds and what effect that has. So one possibility, for example, to target better is to base it on the taxes they have paid. So it has two positive effects. One, you are rewarding entities that will contribute to the exchequer if they get back on track. As they have done in the past. So you're also rewarding tax payment, which is a good thing. People should be paying their taxes. So, and this is transparent. You have a record of who paid what taxes last year before COVID. So supposing you give subsidized grants or subsidized loans on that basis, or, you could even go down to equity. I mean, you need a lot of careful planning through that. Mm-hmm. But those could be ways you could support, viable, at least formally viable. Now, what was formally viable may not be viable into the future. But if you don't want bureaucrats making those decisions and the possibility that they really don't know how to do it, and the fact that you could have tremendous amounts of corruption, the way to do it is to base it on some kind of an objective metric. And I wouldn't make it free. If it's free, then there's overuse, of course. I would put a cost for firms, but below what the market is, so that they're willing to take it. And that those might be the kinds of things one thinks about in trying to protect them. There's been a lot of talk in the US of equity, but nobody's really come up with a good scheme to do it. There's been a lot of subsidized lending, but no real schemes to infuse equity. But those are things one can think about. You could set up so long as you can maintain transparency, structures that are based on objective measures could work. And we need to think about how they might work.
A lot of what you're suggesting really hinges on having very good institutional capacity and the will to do so. So that's, I think, where the difficult.
Yes, but we have been shouting from the rooftops on how we have improved institutional capacity in the last few years, right? How we've become less corrupt, how everything is more transparent. We can make direct transfers. We have obviously GST, which measures what, in a clear way, what taxes you've paid on the goods and services. So let's bring all this together. It requires, absolutely, it requires far more effective government. But that's the government we're supposed to have, right? So why don't we do it? What have we spent the last 6 months doing? Let's get our bureaucracy working based on political sort of direction to actually, the COVID demands much more of government. And what we're seeing across the world is a separation between good government and incompetent government. And it's important that for a poor country with limited resources, we fall in the category of good government rather than incompetent government.
Yeah, I think that's a fair point, that this is the time to really rise and demonstrate what we've been harping about in terms of ease of doing business and governance improvements. Just another question, the banking sector is obviously key to all of this, and we know about the stresses that were already there. So if you look at the relief package, a lot more onus is now going to be put on the banking sector, and there is concern that, all these credit guarantees and moratoriums and so on might just end up increasing these NPAs. What is your take on this, and what is really the solution ahead to cleaning up the banking system?
It's a very valid concern, right? And as you said earlier on, we didn't start at the right place. We started with a banking system which already had high NPAs, and those have undoubtedly gotten worse. I mean, our early NPAs in 2007, 2008 were from big infrastructure loans. More recently, it has been MSME loans, which, MSMEs hit through a variety of shocks they've had, the demonetization, the goods and services tax, and now COVID. So we've had a shifting pattern of NPAs, but they've all accumulated. And the question is, a bank which has its balance sheet full of NPAs is going to be unlikely to have both the capital to lend as well as the willingness to lend, especially because certainly from the public sector bank perspective, if you have a lot of NPAs, you have the kind of tensions of the CBI, the CVC, the CAG, all, focusing on you. So, again, it would have been nice to have cleaned up before this. That's what we started in 2015. We didn't finish it by 2020, which was, we could have gone faster. But now that we are faced with this situation, I think the wrong thing to do is close your eyes and hope that it goes away. The ostrich mentality is very strong in public life everywhere. Because that's if all the solutions are tough, putting your head in the sand and praying is it seems a little better. At least you don't have to make the tough decisions. And to some extent, moratoria, forbearance, etc., can buy you a little time, but they expand the size of the problem. And so you have to deal with them eventually. You can't keep having indefinite moratoria. So in a sense, we need to improve our systems of dealing with distress. The bankruptcy, we've suspended the IBC for some time. Hopefully that time is being used to clear the backlog in the IBC rather than, sit tight. But we will have to reopen it because there will be large stressed firms that require restructuring of their debt. And unfortunately, our system doesn't work well outside of bankruptcy. We need to focus, to your point about improving our institutions, we need to focus on improving the restructuring of debt outside of bankruptcy also. That means our bankers have to have the confidence that if they make business decisions, writing down the debt of a particular borrower, they're not hauled up by one of these agencies for, doing a corrupt act. At the same time, I think they can't simply do whatever they want and claim that they're doing it all for, for business purposes, because we do know there's been a lot of corruption and fraud in not just in the public sector banks, in some private sector banks, but largely in the public sector banks. So we need to have systems of monitoring what they're doing to make sure that, one, loan officer doesn't have all the right to write down the debt, and that it is taken on a reasonable basis, on a defensible basis. But we can't over bureaucratize the thing also, right? So again, it needs careful structuring. Speed is of the essence. There will be some mistakes, but the bigger mistake is not doing anything, because then you get over-levered firms. Even as growth picks up, they can't borrow because they can't get working capital finance. They won't invest, and you have a headwind to growth. So I think cleaning up the financial sector is even more important today. And as these moratoria come to an end, we will have to focus on that. I find it incredible. We're talking about compound interest versus simple interest and who's going to pay for it, when in fact there are much bigger problems coming down the line.
Okay. I think I'll start asking some questions which are showing up in the chat box to give our audience some chance to get the questions answered. So one question here is about the RBI currently pursuing a dovish monetary policy. However, the rate decrease is not translating to more credit in the economy, leading to commercial banks sitting on a pile of cash. How can more credit be made available to businesses and households in this case? So it's talking about the monetary transmission.
Well, this has been a long-term problem, and until you clean up the balance sheets, and until banks have more confidence that they know how to lend, you're not going to get that lending growth. So the HDFCs of the world are making loans. The private sector is making some loans. But the public sector banks have become very cautious. This was right from 2014, which is why we started pushing on cleaning them up. So until the financial system is cleaned up, and this now includes the NBFCs that have gotten into trouble, but until it's fully cleaned up, lending growth is not going to happen. So cleanup is not an option. It is a necessity in order to get the economy back on track. And that's why this has to be a very, very high priority issue.
Let me also ask a question regarding, the manufacturing sector. Again, coming back to the issues of productive capacity, employment creation, which are essential if we have to come back to growth. Now, the government has, launched this whole Atmanirbhar self-reliance schemes, production-linked incentives. And there are two minds on this, whether this is really a new form of import substitution, or this is really trying to develop indigenous capacity for the world, for India, etc. It's not, personally, I'm myself not very clear where this is heading. And even Niti Aayog just, recently announced this is not protectionism. This is different. We care about global value chains, etc. How do you see elements of protectionism in this, or is this something that's welcome?
Well, you're the expert. So if you're confused, I'm even more confused. Look, I don't think we get strong direction from our political leaders here, because what they want is the impossible, as you know. They want, on the one hand, India to export tremendous amounts. On the other hand, they don't want India to import anything. And we know that is impossible. You can't do it. That's not how economics works. But that's the natural political instinct, right? We're open to the world. We're open to exporting to the world, but we're not going to take the imports because we want Indian jobs. And if we can keep them out, I'm going to listen to those guys saying, oh, we're importing too much. We're importing Ganapatis from China. Let's not do that. And that becomes the iconic reason you put a lot of import barriers. But, no country makes everything cheaper than everybody else. If you want to export cars, you'd better start being willing to import some parts of the production process from cheaper places. And so I do think that you, Rupa, need to go and give some people in power a lesson in basic trade economics. Some of these bringing supply chains into these production-linked incentives, they seem to be bringing more assembly into India. I would like to see, over time, that we focus on creating production capacity. There's no point just importing the final assembly, if in fact all the value added is being imported still. But I can see this as an improvement over saying that we're not going to produce anything. At least start with the assembly lines and then move up the production chain. So I think this could well be a positive. It needs to be studied more, but it could well be a positive. Now, of course, you don't want to put too high barriers on the finished product coming in, because then you, as you know, are flourishing in an environment of barriers. And the question is, are you competitive at that level? But I would say our main objective should be to certainly produce more in India, a measure of whether we are competitive worldwide. I mean, our Indian market is still too small for us to be globally competitive. If we were 5 times our size, then we could say, well, if we produce for the Indian market, that's enough. The Indian market can be a learning ground, but ultimately we will grow only when we export to the world. And, you know, Arvind Subramaniam has written some pieces, some very interesting pieces on this most recently. And I think that, he's right that our period of strong growth came when we were expanding exports and imports at the same time. And I think we certainly should not be erecting a whole lot of tariffs in an attempt to protect Indian industry. Our time of strong growth was when Indian industry felt it was capable of competing with the rest of the world. There's no reason why it shouldn't right now. And that's what we need to bring back, a sense of confidence that we can compete with the rest of the world and focus on strengthening exports.
Yeah, I hear you on that. On the import side, I think there's this constant tendency to think that imports are bad and only exports are good. But the fact that imports bring in quality, technology, and so many other benefits, even for exporting firms or domestic firms, that somehow seems not to have gotten into the psyche of policymakers.
Right. And of course, we have a whole contingent of our own industrialists who are quite willing to embrace the, let's ban imports, going back to protectionism of old, because that was much easier. We have some very good industrialists who also see the need to be an open India. And for them, protectionism is costly because it keeps the exchange rate high and keeps India from being able to export. One of the things people don't realize is if you're only an exporter and not an importer, you soon get uncompetitive because your exchange rate is going to become extremely strong. And that's what they don't understand also. There is India moves from being more open and tolerant to being more closed, xenophobic, and underconfident. And I think that this latter phase is really detrimental for us. I mean, Sanjeev Sanyal, who's the deputy economic advisor in the Ministry of Finance, wrote a very nice book on how India's periods of strength was when it was open to the world. I hope the people in Delhi listen to him, because he certainly, and he goes back way into, the Chola Empire and so on, and how, we were a big trading power then. And I think it's important to restore India's glory, but through openness rather than closed-mindedness.
So staying on the topic of, trade and protectionism, how do you think the geopolitical unrest that we're seeing, the trade disputes, a dysfunctional multilateral trading system on top of it, and the realignment potentially of all these supply chains, at least that's what MNCs are talking about. How do you see all this affecting the Indian economy? How well positioned are we to take advantage of some of the new opportunities?
Well, we are near one of the biggest sort of factors in this trade conflict, which is China. The relationship between the United States and China is going to determine what happens over the next 10 years at least, in the sense that China, since, I would say probably 2010, somewhat before Xi Jinping came to power, but certainly accelerated after Xi Jinping, has become much more assertive, much more prickly. It has disputes with a lot of its neighbors. It is a country which is trying to find its place in the world. And there have been good things also. For example, the AIDB that it has set up a number of institutions to funnel credit to the rest of the world. I mean, there have been good and bad sides to this this Chinese assertion. But on the flip side, you've also got an underconfident America, which has now seen a rising China and has suddenly gotten worried about the strategic import of this, especially when China sort of threatens to occupy industries that the United States was historically good at. And, you know, AI, chip manufacturing, etc. The Chinese threaten those areas and threaten also not just through conventional means, but, you know, by unconventional sort of hacking and stealing of intellectual property and so on. So what we have is a number of both commercial as well as strategic concerns coming together. I think the fracture between the United States and China would have happened anyway, perhaps less dramatic with a different administration in power, but both the Democrats and the Republicans feel tremendously threatened by China under Xi Jinping. China has not helped matters because Xi Jinping has been more assertive than previous administrations. Plus, the worry is that China was moving to a more democratic structure. It turns out right now that they're moving away from a more democratic structure. And of course, you have less confidence that they will be peaceful and constrained if they are less democratic. So given all this, I think we are seeing that play out in the US-China conflict. If there is a Biden administration, I think what he will do is multilateralize the discussion, but he won't change the fact that the US is extremely worried about China and what it does. He'll make it less personalized. A Biden administration will make the discussion less personalized. I do think that it is to the world's interest and to China's interest that there be a dialogue on what is responsible behavior and that China be subject to broader rules of the game, but have a part in setting those rules. Sometimes, the West sets rules and says my way or the highway, and clearly developing countries and emerging markets have a right to participate in the rule setting. But if we do adopt a new set of rules, I think China should be party to setting those rules, but should also respect them. And that is my hope for the multilateral discussion in the years to come, failing which China will refuse to play by the old rules of the game, which means you have two blocks. China is already talking about the theory of dual flows, they call it, they have a term for it. Basically means that, we better be independent and we effectively create our own bloc. Now, most countries don't want to be part of either bloc. They don't want to be seen as subservient to China, nor do they want to be subservient to the US. My sense is going forward, economically, they would prefer being part of the China bloc. Politically, they would prefer being part of the US bloc because it's less intrusive. And many countries will be torn. So it'd be good if you're not forced to choose. And that requires multilateral dialogue. If you are forced to choose, I do worry that we will see a deterioration in global trade. It doesn't mean all supply chains will go back to the industrial countries, but it will mean there will be many more alternative supply chain structures without everything going through a choke point in China.
Okay. We have a few questions regarding particular sectoral issues, a lot of questions regarding the latest farm bills. And people would like to know your thoughts. Do you think that this will render the wholesale mandis redundant and thus severely affect the marginal farmers? What's your overall stance?
Well, I mean, what we've seen is an increase in the political rhetoric around this. I think choice is good. And to the extent that the Farm Bill allows farmers more choice, that's a positive. Now, the question really is, so ultimately, the two sides are talking about whether they have more choice or less choice. the government is saying, look, we've allowed them to sell off mandi.
Mm-hmm.
And that means a whole lot of other choices open up, including the private sector, multinational institutions coming and buying contract farming, this, that. You're not subject to the middleman, the bicholi or the arthia in the mandi. On the other hand, the opposition is basically saying, well, if you create this possibility, the mandi collapses, and what you have then is these farmers subject to the rapacious private sector. Now, both are plausible situations, and really the task is of making sure that there are choices for the farmer going forward, and the farmer has the freedom to make those choices, which means monitoring the process. If the mandi collapses, what's the alternative? Is there enough private sector competition, or does the government have to subsidize the creation of some mandis at some point in order to have an alternative? All this is wrapped up in I think, a peripheral discussion about minimum support prices. I mean, the government has a system of minimum support prices. Over time, it makes sense to move away from that to direct transfers to farmers. It has started that process. Makes sense to move along this path, but it is, to my mind, peripheral to the issue of the mandi itself. And again, reforms are not fire and forget. Reforms have to constantly be monitored to see if they're doing what was intended. And that is why the government now, that having passed the bills, has to work to make sure that the intent of the reform is actually borne out. It would have been nice for the government to take other views on board and to see to what extent those views have merit. And, I would hope that going forward, they monitor to make sure the fears of the critics aren't realized.
There's also a question regarding the health sector and, what are the lessons from this pandemic, and also when a vaccine is developed, or how would it be distributed? What are your thoughts regarding the distribution mechanism and prioritization, etc.?
I'm not an expert in how the vaccine should be distributed. I think what we learned from the pandemic is that our health system is weak. We knew that actually before the pandemic. We certainly have to strengthen it. I mean, look, there are some very positive upsides or positive news from the pandemic. For example, we do 1 million tests a day. I mean, that's extraordinary, ramping up from close to nothing. Well, yes, people will say there's a lot of this antigen test, which is not that effective. PCR test is most effective. But just the extent to which our system has ramped up suggests that when there is pressure, we can do it. And so I would take a positive away from that. On the other hand, we also have to understand we made some pretty bad mistakes, including a lockdown without arranging support for the migrants, which then ensured that they left. Now we are aware that our migrants in the cities have no safety net. And so what kind of safety net do we need to create over time? Or is it enough to create a rural safety net, which ensures that whenever there's a calamity, they will go back to their village, because that's where they both have community support as well as things like Manrega. So do we create more of a safety net in the cities? That's something that I know that there is a debate on. We need to think about it carefully. But broadly, as we get richer, we have to strengthen our medical system. And again, there is pressure on the government. Clearly, it has moved in that direction over the last few years. The insurance scheme for poorer households and so on, Ayush Bharat and so on. But we need to do more, and we need to improve the quality. I mean, many people fear going to hospital because of the quality of some of the public hospitals we have. And so, broadly, I think we need to figure out how to do all that. plenty of tasks for us to do.
Yeah. Actually, talking about, innovative ways or new schemes and mechanisms, learnings that we have, what do you think is the role of fintech in all of this in a post-COVID world? What are some of the innovative ways in which we can really plan in a post-COVID scenario?
Well, fintech has two main advantages as I see it. One is it basically reduces transaction costs. And the second is it uses information far more effectively. It hoovers up information and uses it effectively. So I know many of the students here might be interested in careers in the financial sector, and many of you are technologically savvy. And so some combination of the two has to be very important for financial inclusion. If you look at what Ant Financial, for example, has done in collecting data, in making loans available to small and medium enterprises that it services. Well, if the small and medium enterprise is running most of its business through you, and you can see its revenues, well, then you have greater confidence both in terms of making the loan and then getting repayment, because you can garnish some of the revenues as they come through your platform. That's one example of how fintech works. I mean, in China, of course, you can get a loan by giving your cell phone over to the fintech company, and the fintech company will figure out who all your contacts are and who has defaulted, who has not. And there's some very, some of them have very unsavory intrusions into your private life. But I mean, I think that, the information that's available it can be used positively with checks and balances, of course, to improve access to finance. It can also improve savings behavior. I mean, one of the things we pay very little attention to is India's credit to GDP is 50%, 60% possibly in business cycle peaks. This is really tiny relative to what many emerging markets have. So we need to expand both savings as well as credit, and we need to expand it in an effective way. I mean, it's horrendous that we have this level of NPA for such a low level of credit. I mean, if we were running 120%, 150% of credit like China was in its early days, then you can imagine that, high NPAs perhaps would result from that kind of significant credit expansion. We're running very low levels of credit and still making NPAs, which means our systems are really not up to the mark. We need to strengthen them. And fintech, I mean, build better. That's the Biden slogan, build back better. We're not building back, we're actually building better, because there's nothing to back. We need to build forward better. And I think that's something we can do with fintech.
Thanks. So I think we have time just for two quick questions. One is on Budget 2021. What do you think are the top 3 agendas the government should focus on in that budget?
Far be for me to give advice. I mean, look, I think we already will have a high level of both fiscal deficit as well as debt. I really do think it's time for the government to come clean. The CHG has already pointed out that the numbers didn't add up before. Well, if everybody knows, why not just come clean and say, this is the true situation and we're going to rectify it. It's not as if the rating agencies don't know. It's not that the public markets don't know. Everybody knows. So why not come clean and say, okay, here's the real way we're going to strengthen this over time. And we're not going to have these fake deficit numbers, which are meaningless except to the bureaucrats who make it.
But no particular other agenda? So this is again coming back to issues of transparency and governance.
There will be plenty of issues we'll have to deal with, right? We've already talked about most of them.
Right.
There will be a need to revive infrastructure strongly. We should have done it before. But there will be a need to accommodate the additional spending. You will have to deal with the fact that many of our states are in a bad fiscal situation also. So the center state division of fiscal resources will be very important. Revenue generation is going to be really crucial. I wouldn't raise taxes significantly at this point, but I would certainly spend a lot on improving tax collection and ensuring, for example, VAT. We've let it run for some GST, I should say. We've let GST run for some time. what are the missing parts to make it work as effectively as it should? Reconciling, if I understand it, some of the bills, and making sure that that in fact people pay, and whatever bills they generated are reconciled to make sure they've actually paid on the other side. I think if we do that, we could improve GST collections.
Yeah.
It's time to strengthen our revenue collection so that people who are generating profits actually pay those as taxes. What we can't afford is going slack on the revenue generation. I'm not saying create an environment of fear, but a little bit of fear, very, very carefully done, is very important to pour encourager les autres, as they used to say. I mean, you need to encourage everybody to pay. A broad-based environment of fear is in nobody's interest. But pursuing a few cases to their logical end, the problem is we pursue on a big scale and we never bring anybody to justice. This is true of our broader justice system, which is why we sometimes say the process is the punishment. You never actually go to jail if you're sufficiently influential, but you're dragged through and all sorts of allegations, etc., until you finally clear your name when nobody really remembers what the initial issue was. We need to clean that process so justice is quick, but justice is not broad-based and indiscriminate. It is very pointed on the very few who really sort of breaking the system. And that sends a message very quickly to those who are tempted to try. I mean, I was very much concerned about frauds in the banking system and the importance of pinpointing them quickly and following the money trail, arresting people quickly and charging them and bringing them to trial and finishing it off. Rather than this process, 3 years after the fraud takes place, we wake up and say, well, partly because nobody really is incentivized to push this process, the money trail has gone cold, and then it takes years and years. That seems to me to create an environment where you actually encourage people, saying, why not do it, because nobody gets caught.
I think a lot of what you're saying is making me a bit despondent, because perhaps I don't have so much faith in this whole calibration, the well thought out, because a lot of what you've said really requires very careful thinking, a lot of checks and balances. And I come back again, institutional capacity, governance, efficiency, and somehow I think whether we will rise to that challenge eventually or not, I don't know, but I don't see that happening in the current.
I think we can. I think it's defeatist to say we can't.
Okay.
I agree with the sense of despondency sometimes, but look at all these young people, sharp minds, willing to work hard. You just have to get them on board and set them the tasks. I mean, once you give them the task, they go out and do miracles. I mean, these kids are next to nobody in the world. And so why do we sort of let them go into a system and then become, just like everybody else in the system? That's not what we want. What we want is these kids to have their edge, have their desire to do things a lot better than out there, and feed that, not by giving them mindless tasks for the first 10 years so that all initiative is driven out of them, but bring them on board and say, look, you can do it. And we all can do it. And look at all the other people like you who've done it elsewhere. And increase the capacity of government. I mean, we don't demand enough of our government. And government, certainly there are very good people in government.
Sure.
We need those people to take more of an initiative, but also expand, the realms where government is really effective. Look at an agency like ISRO. Fantastic work they've done. And, interestingly, ISRO doesn't necessarily recruit from the IITs. It recruits from it historically has recruited more from the RECs and so on, which is where the bulk of Indian engineers are, and done, fantastic work with the people that they have. So, I mean, look, if they can send a mission to Mars, we can certainly fix GST.
Okay. One final question, which is on the upcoming elections. I know you briefly alluded to the difference that might be, if a Biden administration comes in. But how do you see the outcome of this election, either way, influencing the path to recovery, the corporate sector, and relations with economies like India?
Look, if President Trump wins again, I do think that there will be are you talking about influence on India or on the US?
Well, influence on India is my last one in terms of relations, but separately about the US economy and recovery and so on.
Well, I do think that the pandemic is not over. And this administration's general movement has been towards, we can't control it now, let's wait for the vaccine. And of course, we don't know if a vaccine is going to be that successful. Right now, the feeling is only by the end of the year will we have a clear sense of the trials. And even then, you may get vaccines that are 60 or 70% effective, not 100%. So I think that one is there's a lot of weight being put on a vaccine now. Vaccine will take time to roll out. And even then, there will be concerns about its effectiveness. So in some sense, if you let the virus flow and don't insist on trying to bring it under control, I think we really have a bad 2021 also. If you do focus on measures to bring it under control, maybe coupled with a vaccine rollout, which is effective, things will start looking a lot better by the middle of next year. And then you get a stronger recovery, not just in manufacturing, but in services also. I think the atmosphere, hostility on trade and so on will diminish somewhat. I certainly think the US with the Biden administration will not be picking fights with Europe or with Japan. More of the focus will be on China and trying to reach some kind of a reasonable settlement. It'll be less in your face, but more steady pressure. And that may be more effective, I think, in the longer run in making China more responsible. I'm hopeful. Of course, on issues like oil, Iran will probably come back into the onto production, which means good for India because oil prices will still remain contained, even as the recovery picks up. I think initially the relationship at the highest level between India and the United States may be a little more, what's the right word? It'll take time to rebuild because we have been seen as very firmly in the camp of President Trump. And some of our actions on, for example, the Citizenship Act and on Kashmir have been seen as being a majoritarian. And certainly the Democrats, Pramila Jayapal, for example, Ro Khanna, have been quite vociferous in saying that they like the old India, not this version. So there will be a period of adjustment because they have influence in the Democratic Party. But I think the underlying relationship between the two countries is very strong. Because of the diaspora, because India is still seen as a strong democracy and increasingly seen as an alternative to China, at least on the geopolitical front, the Quad, the four countries together and so on. So I suspect even if there is an initial period of a little bit of tension, it will be overcome over time. The India-US relationship will strengthen rather than weaken over time. I do think there is an opportunity for us to build on the relationship economically, and we should not let it go. So more supply chains coming through India, and it goes back to the discussion of trade we already had. We must be more welcoming rather than hit their big firms with unexpected sort of measures. We have to walk the talk to some extent.
Okay, so thank you very much. I think we've exceeded the time by a little bit, but I hope that's okay. So we've really covered a wide range of issues: geopolitics, economics, farmers, everything. I think this year is particularly interesting. We'll all have a minefield of things to analyze once more data comes in and we really see how the measures unfold over the next 2 years. So thank you very much for giving us so much time and sharing your thoughts, your insights with us. I'm sure the students have also benefited greatly. So good morning to you, I guess, over there. And thanks everybody for contributing with questions. Thank you.
Good night.
And we hope
Thank
you'll
you.
join us again sometime in the future.
With
Please
your
allow me a
persuasive
break.
powers.
With my persuasive powers. Okay.
Thank you. Bye.
Thanks. Bye. Bye.
Please allow me a minute to thank.
Yes. Yeah.
That was a very lucid yet insightful discussion on some of the most complex economic issues facing the world and indeed India today. Today we saw 1200 plus live viewers for this session with us. I would like to thank Professor Rajan and Professor Chanda for their time and a very enlightening session. As a token of our appreciation, a contribution has been made in your names to Shade Trees, an organization that works on tree plantations in India. Agroforestry saplings have been planted in your names, and that has made a difference to the life of a farmer in Karnataka. We thank you again for your time.
Thank you. That's a very
Thank
nice
you.
thought.
Bye.
Yeah. Bye.
Thank you, sir.